Welcome back to Rockstock Channel and another in our Getting to Know You series with Lithium Universe. Lithium Universe trades on the Australian Stock Exchange, ticker symbol LU7. The current stock price is about 1.2 Australian cents, and it has a market cap of 9 million Australian dollars, or about 6 million US dollars. Lithium Universe is progressing plans to construct a lithium carbonate facility in Bécancour, Quebec, for which it recently published a pre-feasibility study. The company is just completing an equity raising and an entitlement offer, which will bring its treasury to about 3.2 million Australian dollars in cash on the balance sheet. You could follow Lithium Universe on X at Lithium Universe, and its chairman, who you'll hear from today, Iggy Tan, at Tan Iggy. Iggy is one of the lithium industry's OGs, having founded Galaxy Lithium, which built the Mount Cattlin spodumene mine in Western Australia and carbonate conversion plant in China with Tangxi Lithium. Galaxy merged with Orocobre, which became Allchem, and then Arcadium, which is now being bought by Rio Tinto. As you'll hear today, Iggy has assembled what he calls a dream team of lithium chemical experts to help fill a critically important midstream processing gap in North America. Unlike some of its peers, Lithium Universe will focus on building a carbonate rather than a hydroxide plant. To be clear, Rodney and I are not strategic advisors to, nor invested in, Lithium Universe. And of course, we are not financial advisors. Nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. Note that a written summary of this interview will be published in the next edition of RK Equity's Lithium Ion Bull. Please register your email at rkequity.com if you'd like to receive this newsletter directly to your email box. And please make sure to like this video, subscribe to Rockstock Channel, and leave a question or comment below. What do you think of Lithium Universe's prospects? What other companies might you be interested to hear from on this channel? And with that intro out of the way, welcome Iggy Tan for the first time to Rockstock Channel. Why don't you give us a little bit about your background, Iggy, and what attracted you to get back in the lithium game with Lithium Universe?
Yeah, well, essentially, to really help the lithium industry again, my background, I was actually ran Greenbushes Lithium in 1995 and was involved in the commissioning of the first lithium carbonate plant in Australia. A lot of people don't realize that Australia tried to do lithium carbonate back in the 1995. That process actually was a alkaline pressure leach process, Howard. And essentially, we had a lot of problems with scaling, and eventually the plant was shut down when SQM came on the market and half the price of lithium carbonate. And then, as you said, I was involved in Galaxy Resources. We built the Mount Cattlin spodumene mine, and then also the downstream Jiangsu lithium carbonate plant, rated at 17,000 tons per annum. So it's good to be back in the industry, and we have assembled a great team.
Okay, great to have you on for the first time, Iggy. If we look at what's happened with Kwinana and Kemerton and the struggles that they've had, I mean, a company like Lithium Universe's team, a long history, it's a unique opportunity to produce battery-grade chemicals outside of China. Can you give us a bit of a sense of some of the other team members and their experience?
Yeah, so as you know, Rodney, with some of the technical problems with the Kwinana and the Kemerton lithium hydroxide plants, one thing you need to know is the lithium industry is a relatively young industry. When you compare it to industries like aluminium or titanium, it's a relatively young industry, and there's not a lot of experience around in hard rock lithium conversion. So we believe that some of the problems that we see in Australia is due to the lack of that operating experience, supervising the engineering side when you design these plants. So our first mission to resolve that, the two issues: one, the experience, And number two, the proven technology is to assemble the most lithium experience you can get in one single company. So as I mentioned, my background, we also have Pat Scallon, who's a 30-year veteran of hard rock processing at Greenbushes. He took Greenbushes from 200,000 tons per annum to 1.6 million tons. So if you want experience, Pat has got 30 years of that processing experience. Also joining me is Dr. Jinwat Liu. He was my right-hand man at Jiangsu Lithium Carbonate plant, and today he's probably recognized as the world expert in lithium carbonate and lithium hydroxide, being involved in nearly 20 projects. We also have Terry Stark, who was the ex-general manager of Galaxy Resources, Roger Pova, who ran the Mount Cattlin operation, John Loxton, who was on the Hatch side and built the Jiangsu Lithium Carbonate plant, and then also John Sobolski, who was our CFO, who also was involved in the funding for these projects. So as you say, the most lithium experience we can pull into one company, that's the first step. And then the second step is technology. We built a plant that happens to work really well. It's probably running at well above design today at 20,000 tons per annum. It's a Western style plant, and it's probably the benchmark for most refineries around the world. So essentially what we're doing, Rodney, is to take that and replicating the success of Jiangsu and to build that plant in Bécancour.
And Iggy, do you feel that the fact that you're focusing on carbonate versus Kwinana and Kemerton that focused on hydroxide is an important difference?
Yeah, the general market, Rodney, is generally about 50% carbonate and 50% hydroxide. A few years ago, there was a push for lithium hydroxide because the lithium hydroxide is the feedstock for high nickel cobalt batteries, whereas lithium carbonate is the feedstock for LFP batteries or lithium iron phosphate batteries. And so years ago, when you wanted to drive a vehicle from 0 to 100 kilometers in 3 seconds, you wanted some of these high power batteries. But today the focus has shifted. They are now, a lot of the EV companies are moving to LFP batteries because they're much safer, they're much cheaper, and because of new technology in LFP, really getting the distance. So the proportion of carbonate versus hydroxide, we estimate will go from 50-50, probably closer to about 67% carbonate. And in the grid storage sector, probably about 85% carbonate versus hydroxide. So there's a big shift in the demand for carbonate going forward. We spoke to this about 18 months ago, and sort of the industry sort of didn't believe it, but now everybody's talking about it. And in our recent visit to China, some of these hydroxide plants are starting to move to carbonate.
And Iggy, other factors like operating direction at design influencing refineries' performance, how important is that?
Well, a good question, Rodney. We had some philosophies, and I think that sort of bore it out in the success of Jiangsu. And number one philosophy, we tried to keep things simple. So the design is very basic. And I'll give you a good example. The coolers at the end of the calciner, it's virtually a rotating drum with water just pouring around the outside. And essentially it does the job. And the reason we went for such a basic design is because we knew that it wouldn't block up. What we see with some of these other plants around the world, they start to use very sophisticated coolers, fin coolers or shell and tube coolers, great efficiency, but they tend to block up and cause a lot of processing problems. So that's number one, keep it simple and basic. Number two, philosophy is that we don't have a lot of recycling within the process itself. So for example, one of these plants in Australia, they will take the hot air from the sulfation kiln and they would recycle it back to the calcination kiln and use that hot air, which is a great idea on paper. It saves some energy. But the problem is, from an operator's point of view, if the sulfation machine kiln goes down, the calcination kiln goes down. And generally, it takes you 36 hours to heat up a calcination kiln. So you have this problem of plants being variable because of that philosophy. And the other philosophy is that we buffer tanks are important. I'll give you an example. One of these plants in Australia, there is a buffer bin between the calcination kiln and the sulfation kiln, which is 4 hours. Essentially, a 2-hour operation. If one plant goes down in 2 hours' time, your kiln goes down. At Jiangsu, we had a 48-hour buffer bin that allows the back end of the plant to run independently for 24 hours, decoupled from the front end. So it's simple things like those philosophies that really help bring good operating designs in. And I'll give you an example. When you let the engineering companies design these plants and you don't have supervise it from experienced operators, for example, they may put in a pump that looks good on paper, but from an operator point of view, they'll say, well, that pump will wear out in 3 weeks. Don't use that type of pump. So those simple things, I think, has borne through in the success of the Jiangsu design.
And if we move on to where you were looking to choose to do the plant at Bécancour, what's the rationale for the location?
Well, we selected Quebec because we think it's very competitive with Chinese conversion. Number one, we have access to cheap hydropower. The stated price for hydropower in Quebec is like 2.6 cents a kilowatt hour. If you compare that to other parts of the US, even other parts of Canada, it's nearly 5 times more expensive. Number two, surprisingly, labor. If you compare to building a plant in Australia versus Canada, the capital costs due to labor in construction could be 25% cheaper in Quebec. So labor is a factor. And then number 3 and 4 is we're close to the mine. So if you think about where the producing mines are, they're part of Quebec. They are part of Brazil. They're part of Africa. And as you mentioned before, spodumene, when you ship spodumene all the way from Canada to China for conversion, it could be close to $150 a ton of spodumene. That's equivalent to nearly, $1,200 US a ton of lithium carbonate. So that's a big component. And then finally, you've got these tariffs. The US and Canada have a 25% tariffs on Chinese lithium chemicals. And when you add all that up, we are nearly 40% cheaper doing the conversion in Quebec because of cheap power. We're closer to the mines and also the tariffs.
And now that we've just had the US election and we have the outcome, do you think that, it takes time to process, but do you think that outcome changes anything? Is it possible that actually ex-China's supply of chemicals is more important than ever for the US?
I certainly agree with that, Rodney. I think there will be more focus on decoupling the battery materials from China. Today, the tariffs are 25% and they may go up. So I don't think anything will change. I think there will be more focus on onshoring the battery supply chain.
And do you see any opportunity, Iggy, to getting government grants or lower cost funding to support critical mineral self-sufficiency in North America?
Well, yes, of course there are many grants, particularly in Canada. You've got a lot of tax incentives for some of these plants. Critical minerals tax incentives. You've got export development, Canada. You even got the provincial investment, Quebec. So what we tried to do was we tried to have the project stand on its own legs. So we never included any of these grants or handouts in our economic modeling, and we wanted to stress this project under low lithium pricing conditions, without any grants and handouts, to see the economics of this project. And the economics is very strong.
That's a great chance now to pivot to your original feasibility study. If you can, just for those tuning in, give the key assumptions that we used to and what the numbers came out at from an NPV basis.
Yeah, thank you, Rodney. The plant is based on a 18,270 thousand tons per annum of lithium, battery grade lithium carbonate. The NPV for the project is around $776 million US dollars. The payback is less than 3.5 years. The internal rate of return is 23.5%, and it should generate an EBITDA of about 147 million per annum. Now, the assumptions for pricing, we use very low conservative pricing. So we assume SC6 spodumene at 1,170 US dollars a ton. We assume that the lithium carbonate price at $20,970 a ton. And if you look at it on the graph, these two prices don't pick up all the highs that we saw in the last few years. This is a very low base price to stress the project to see whether it can stand these pricing conditions. As I mentioned, if we add on another 25% increase from those assumptions, the NPV rockets up to about 1.23 billion. So the message here is that we wanted to see how the project stacks up under low pricing conditions without any grants and handouts. And the good news is that it's very positive under those conditions. And the reason is we have access to cheap power. We are close to the mines, and the labor conditions are very good in Quebec.
And do you see the potential for premium pricing for a product that would be low carbon footprint ex-China, excluding the tariffs, just on the basis of its footprint?
The short answer is no, Rodney. It's a nice to have, but we're not relying on a premium for the green part of that. It is a green lithium carbonate because we use hydropower, and that's great. But we use benchmark pricing that is competitive around the world. We need to compete worldwide, and we need to compete with Chinese conversion.
So I don't think that there's going to be a green premium, but there might be a security premium. And in the most recent SP Platts, I tweeted about this recently. There was, they showed the price in China, and then they showed the CIF North Asia was at like a 12 or 15% premium. I think, or IRA compliant is what it said, an IRA compliant differential. So maybe not a security premium, but like this IRA compliant, I think is relevant.
Yeah, I agree. And maybe it takes in some of the tariffs. But on the security of supply, let me explain our business model. The capital cost of the project is about 494 million US dollars. The way we intend to fund this is we are going to divest 49% of the project to a couple of strategic investors. And one of those strategic investors will be an OEM that has currently offtake of spodumene. So as you know, years ago, these large OEMs secured spodumene offtake. For example, Ford has offtake from Liontown, LG has offtake from Liontown. The original plan was they probably were going to convert it in China, but today it's virtually impossible because of government action, tariffs, IRA funding. They need to partner up with somebody like us that has lithium conversion capacity that can do it of using proven technology. And essentially what we would do is we would buy the spodumene from them at benchmark prices. We would convert it to a battery-grade lithium carbonate, and then we would sell it back to them at benchmark prices. So it would be no different if they had to buy the lithium carbonate on the market. But what we will then do is that we become part of their supply chain. And as you mentioned, Howard, the importance of that security of supply is our business model.
And Iggy, you say you'll be able to process all spodumene concentrate types. Can you just elaborate on that?
Yeah, so the Jiangsu plant was able to process different types of spodumene, Greenbushes, Mount Cattlin, and various types of spodumene. So we were confident that the same design. So essentially, we're using same flow sheets, same equipment, and same suppliers. We were confident that it'll process the spodumene from around the world. But what we did was we purchased spodumene from various sources that had various lithium content and lithium and various impurity levels. And then virtually we simulated our process in the lab and virtually were able to produce battery grade lithium carbonate on any spodumene you could throw at us. It is a very robust lithium carbonate plant. As I mentioned, part of the philosophy is keeping it simple and basic and robust.
And so you mentioned briefly now, I mean, the key to moving a project forward is always financing. You're in discussions with offtake and funding. How are those progressing?
Well, as you can imagine, there's a lot of interested OEMs. So we've commenced discussions with those large groups. They're very interested, of course, in the ability to convert their spodumene into battery grade and then to feed into their supply chain. We are talking to strategic investors and various Canadian government groups like Export Development Canada, Investment Quebec. All these groups are very interested in filling the conversion gap. And as we say, there is nearly 1,000 gigawatts of battery plants being built in North America, and on the mine side, there's just in Quebec, there's 40 companies with nearly 500 million tons of spodumene in the ground, but there's hardly any converters in the North American market. And so today in hard rock spodumene conversion, most of it happens in China, and most of the technologies in China. We happen to build a plant that helped that technology develop, and now we're just replicating it in Quebec.
And we won't hold you to it, Iggy, but roughly the sort of timeline on major milestones and when you would hope to move forward and get into production?
Yeah, we're racing to finish a DFS. So we think within the next quarter we will complete a DFS, and then we will start to move to the funding stage. We will appoint a debt advisor to help us through the process. As I mentioned, we are talking to a lot of the strategic parties. We've had discussions with various banks. And also on the permitting side, it is an industrial park. It used to be a farmland, so we don't think that permitting is an issue. It's in fact pretty straightforward. And so we're really pushing all fronts, and there will be quite a lot of milestones that will start to hit within next year.
Okay. I got a couple more questions, Iggy. In your PFS, you said 1170 spodumene price and a carbonate price of 20,970, I think. Rodney, maybe you could help me with the math, but that seems to provide a relatively healthy margin on the converter side, compared to what we've seen in the past, where people like Chris Ellison were arguing that conversion, if you're on your own rock, you're God, because conversion has low margins. So, and again, Rodney, maybe you could help me out. And I don't know what the processing cost is, but that does seem like a higher carbonate price relative to spodumene, than we've seen in the recent past. Am I right about that?
Well, I mean, the thing that Iggy raised is, that would be his price. I mean, if let's say it came from Canada, there'd be no transport on top of that, or very little, because it's right there.
Yeah.
And then you've got no tariffs and all of those other things. So it depends on, I guess, how you view it.
Yeah, and I think there is a misconception about converter margin versus mining margin. And yes, it does flex around in the various cycles. But a good example I talk about is Tianchi, who owns half of Greenbushes. And in their annual reports, they have to report a margin for Greenbushes material, and then also report a margin on some of the lithium carbonate reduction. And in some years when the margin was 61% on spodumene, the margin would be around 60% on chemicals, and in other years it would be very similar. So in the end, there is capital intensity in conversion. It has to be paid back. The notion that there is no margin there is it's not correct.
There has to be margin on all sides, otherwise these plants won't get built.
Exactly.
So I also want to just get at this comparison of Western Australia to, let's say, Canada, Quebec specifically. That's where your focus is. But here you have, like, in Kwinana, the Tangshi, yes, it's hydroxide. You mentioned you're taking Greenbushes feed, the best quality ore in the world, but Kwinana, just can't get up and running, in a good way. But whereas, converting that Greenbushes in China is no problem, right? So you talked about the cost advantages of Quebec compared to Western Australia in terms of cheap power, cheaper labor, closer to the mine, and the tariffs. But this skills differential between Western Australia and China, but how could we? There's a lot of skepticism among Australians. I was at the Sayona site visit and also at the Arcadium Investor Day. There were a lot of Australians here looking at the Western Australian bust in conversion and saying, you can't do it anywhere other than China. Quebec's going to be the same as Australia. So could you, in Australia there's aluminum mines, right? And there's aluminum mines in Quebec. So why is Montreal and the skills, better in Quebec, or is it, than in WA?
I think it all comes back to the design, Howard, of the plant. So we take Tianchi. It was given to an engineering company that had no lithium conversion experience. They had 30 people, and they expanded to 350 people to design this plant. A lot of mistakes were made. There was an input from operators, and essentially you got a plant that has a lot of these problems. That basically is in a nutshell. And when you have these problems in design, it's very difficult to get out of it. It takes many years, and often you might not even get out of it. So it all comes back to design. Um, Kemerton is exactly the same. An engineering company that has no lithium conversion experience. They tried to take Chinese batch philosophy. So the plants in China tend to be batch processes. You're trying to transfer it into a Western style continuous processing plant. So there were a lot of issues with that transfer. And so, again, all the problems start with design. And so you've got to get that right. And if you don't get that right, it doesn't operate. It doesn't matter where around the world it is. So the difference for us is we're taking a design that works. We're not trying to start from scratch. We're taking the same engineering company that built it. We have the same flow sheet. We have the same equipment. We have the same supplies, and virtually replicating that in Bécancour. So there's no problem about the plant working. That the risk of technology is taken out. And then you talk about labor force. Quebec has got one of this highly skilled labor force. A lot of industries in that area, aluminium plants. Namaska 2 is being built there. So there's no problem with getting skilled labor there. And it's a matter of training them up to the process that you have. The beauty is that we've run this process. We know we have every operating procedure. We know how to run the plant, and we can very quickly teach the operators to run the plant. Whereas these plants around the world that are built from scratch they have to write procedures for it to work out how to run these things. The benefit for us is that we have every procedure that you would need. It's a bit like getting an IKEA furniture with all the instructions. So we don't think Quebec is going to be a problem. Good labor force, access to cheap power close to the mines, and really can compete with Chinese conversion.
Okay, great. Who's your engineering firm?
Hatch Engineering, so Canadian group that built the first plant. Lots of
Okay,
experience
actually,
around the world.
okay, I'm glad to hear you say that because our friend, Joe Lowry on the Global Lithium podcast, I know he interviewed you, but he also interviewed a Hatch person who described that Jiangsu plant for Galaxy and why, and he was making an argument that if you design something to Western standards, right, the plants have a much longer life. A lot of the like Chinese plants, where they say, oh, they're so cheap to build, but they're not designed, with as long life. But the fact that, that Jiangsu plant, which originally, had some struggles with the Mount Catlin ore, but was fundamentally ultimately fixed. So that just goes to, it's not only the people that you mentioned earlier in the podcast, but Hatch has done this before, and carbonate's a lot easier than hydroxide. And and one thing I mentioned in a recent podcast is that, like, if you look at what's been funded in America, Thacker Pass and also Ioneer, they're going to be producing carbonate, right? And GM is the off taker for carbonate from Thacker Pass, and Ford and EcoPro and I think Toyota, Panasonic are for Ioneer. But this I think there's a thought process. As you said, everybody was moving to hydroxide, a few years ago, and there was this concept: hard rock to hydroxide has a cost advantage. But if you go carbonate, brine has the advantage. But most of China conversion today is, I think, still hard rock to carbonate, right? Or a very large percentage of China conversion. So I think hard rock, like this conventional process compared to a unconventional DLE or even a sediment process, this idea, like in the lithium world for North America and even in Europe, hard rock to carbonate, spodumene to carbonate, I think will be seen as, oh yeah, that's lower technical risk and can be as or more cost competitive than some of these unproven brines.
Yeah. So maybe you can answer your question in a few parts. Number one is that the Jiangsu plant was designed for international standards. So, and we went from groundbreaking to first product out in 2 years. So we did that in record time, as Sid said. Number two, there's a misconception about the conversion costs of spodumene to hydroxide versus spodumene to carbonate. People believe that hydroxide is cheaper. If you compare the lithium units, it's exactly the same. In carbonate, you're producing more product because there's one monohydrate, one water there. So LiOH with one water. So you're producing more product, and that's why if you divide it by more products, it looks like the cost of per ton is cheaper. But if you express it as per lithium unit, it's very similar. And then your comment about brine to lithium carbonate. Yes, the brine process is cheaper, but often you don't take in the costs of refining the carbonate from brines to battery grade. So currently, brines produce a raw carbonate. It can never get to the battery grade without refining. So Orocobre was classic. They made a raw carbonate. It was shipped to Japan. It was then refined to a battery grade lithium carbonate. And part of the problem with the brine lithium carbonate is chloride levels. A typical brine battery grade chloride levels will be about 200 parts per million. The specs for that generally is about 30 parts per million. And in a hard rock process, the chloride levels are 6 parts per million. So chloride is a big problem in batteries. It causes corrosion. It interferes with the life of the battery. It interferes with the electrochemistry. So often people don't compare apples with apples. They take the cost of brine producing just a technical grade lithium carbonate. But yes, you're right. The technology we use is 50s technology. If you look at this process, it was done in the 50s in China and also in the US, right? It's old technology, but it's proven conventional technology. And we stayed away from unproven new technology just to take the risk out. So as I said, very simple, basic design.
Very good. Okay, that's really helpful color, Iggy. And, we're near the bottom of the lithium market, if not at the bottom. And, the lithium scoreboard has, had some green shoots over the last couple of months. Your stock, you've been busy doing a financing. And now that financing is done, you got 3.5 or 3.2 million Aussie or will, and you're heading from pre-fees, I guess, to definitive fees over the course of the next year. And the partnering process, it's always like you're a very low market cap and you have a very high capex. So obviously, market conditions need to change. But these are like, I like this story, because we like Quebec, and it's carbonate, which is different, and you got a great team, right? So, but you are a merchant converter. You do have to get that source of, spodumene supply. But we have heard that groups like Ford have like overcommitted, their spodumene needs, right? And Liontown is going, and there's plenty of spodumene around, but you'll need to solve that conundrum. But we're a very young industry, as you said, and there's still a lot of growth from 1.2, 1.3 million tons to 3 million plus tons. Or if you believe, I know you like YJ Lee. We just had him on the podcast in Singapore. 4.3 million tons by 2030. Prices will have to rise. So with that, Iggy, just one, I'm sorry to put you on the spot here, but I forgot to mention, in creating a teaser for this Lithium Universe video, what's like a favorite kind of rock band or song that we could use to summarize this video?
I like Ed Sheeran. Bad Habits. How's that?
Ed Sheeran, Bad Habits. That's great. And it's great that you were able to come up with something so fast as I put you on the spot. All right. Bad Habits, Iggy Tan, thank you very much. And look forward to following up with you soon.
Thank you for having me, and I enjoyed the chat.